So in question 2, we have to prepare all of the journal entries in our job costing system. Now, I think it's easier for me to just snip this out, and I just have Excel open, so I'll just put it over here. And that way, when I'm working on my journal entries, I don't have to keep going up and down. Okay, so I'll grab this and just copy it right into my Excel book. And then I'll just move it so it fits. Okay. Now, the inventory accounts that we're working on is our raw materials. So that's the inventory account that we use when we buy our product and we haven't made it yet. And then once we start a job, the raw materials go into work in process for the direct materials and then manufacturing overhead for the indirect materials. Now, we also have direct labor, but those go directly into the work in process and directly into the manufacturing overhead account. We don't have a T account for that. It just is allocated once payroll's done. Then we also have our finished goods account. So when we're done making the product, so that's direct materials, direct labor, and applied manufacturing overhead go into WIP until it's finished. Then it goes into finished goods. And then once it's done and it's sold, it goes to cost of goods sold. So in the manufacturing overhead account, on the left side, you have the actual manufacturing overhead, and then on the right side, you have the applied. So instead of thinking in terms of debits and credits, just think, because most of these are inventory accounts, think of debits as stuff going into the account and credit as stuff going out of the account. So when I read raw materials were purchased on account for 300, I'll put the numbers in first. And that's stuff going into the raw materials account. So I'm going to put raw materials. And when it says on account, it's either your choices are accounts payable or cash. So I'll just do accounts payable. Then my second entry is raw materials were issued to production. So 228,000 direct materials and 62 indirect. So I always put my numbers in first. And then that's 290 total. So I'm taking this out of raw materials. So my raw materials inventory account is going to be credited. And my direct materials are going right into the WIP. So I'm going to choose work in process, if I can find it. And my indirect materials will go right into my manufacturing overhead. Direct labor cost was incurred. 110 indirect labor cost was incurred. 90,000. Oh, I see it. I read that kind of strangely. 110 is the direct labor. And 90,000 is the indirect labor. And so if I just add those two together, I'm just going to use Excel as my calculator. That comes out to 200,000. So your direct labor goes straight into your work in process account, so in, and your indirect labor goes straight into your manufacturing overhead account, in, and then it just comes out of the salaries and payable account. So that journal entry is probably done every time we run a payroll. Okay, depreciation was recorded on the factory equipment for 70,000. Okay, so I know when I record depreciation, I'm going to credit accumulated depreciation, which is the contra asset account, just to bring the value of the equipment down. Now, if this was a selling and admin expense, I would just call it depreciation expense, but because they said it was for the factory, I'm putting it into the manufacturing overhead account. Other manufacturing overhead costs were incurred during October for 140. So these are all of the indirect costs. So if it's not direct materials and it's not direct labor, it goes into this account if it's a manufacturing cost. And it just said on account, so I'm just going to put it to accounts payable, and then all of your actual manufacturing overhead goes in as a debit into the manufacturing overhead account. The company applies manufacturing overhead costs to production on the basis of 12.6 per machine hour, so that's the predetermined overhead rate. There were 30,000 machine hours recorded for October. So if we take the predetermined overhead rate and then we multiply it by the actual activity, then that's going to give us our applied overhead. So this is what we allocate into WIP when we're working on a job, because we don't know what the actual manufacturing overhead is until the end of the year. So the applied goes straight into the work in process account, and then this comes out of the manufacturing overhead account. So in and out. Now we have production orders costing 720 according to their job cost sheets were completed during October and transferred to finished goods. So they go into finished goods and out of WIP. So they're now sitting in the finished goods account waiting to be sold. And then production orders that had cost 680,000 were completed and shipped to customers. So once it's shipped, we take it out of finished goods. To add another zero on that one. So out of finished goods into cost of goods sold. And just remember, this is a two-part question because not only do we have to record the cost, we're also responsible for recording the sale of the product. So I'm just going to assume that the sale was on account. And I think it might tell us. These goods were sold at 25% above cost on account. So that's why I put accounts receivable. So if I just take 680,000 and I times that by 1.25, then I'm grossing it up by the 25%. So then that's 850,000. Or you can just do 680 times by 25% and then add that to the 680. We'll get the same answer. Okay, so the next part says prepare T accounts for manufacturing overhead and work in process, and then compute the ending balances. So I'll start with my work in process. The beginning balance was 42,000, so I'll put this in, 42,000. And now all I'm going to do is read my journal entries. So I'll just start at part 1, and anywhere that I see work in process, I'm going to put it into my WIP account. So I see work in process here, so I'll go down to B, and then I'm going to put that amount in as the debit. So the journal entries are done, so I'm not doing anything now. All I'm doing is posting them and reading the journal entries. Work in process C is a debit for 110. No work in process there. Work in process F, a debit of 378. And a credit to work in process for G, 720. So And that was it for my work in process. So my ending balance is 38,000. And I'll do the same thing with the manufacturing overhead. Now, manufacturing overhead, if it's at the beginning of the year, we wouldn't have a beginning balance because we always clear it out. We taught you to clear it out to cost of goods sold. But if this was just a monthly, let me just see. Yeah, this is the first month of the company's fiscal year, so that's why it's not going to have a balance. But if we were like in the middle of the fiscal year, then we may have a beginning balance in manufacturing overhead. Okay, so let's just go back to number 1 and read the journal entries and see whenever we put manufacturing overhead down. So B, manufacturing overhead for 62,000. C, manufacturing overhead for 90,000. D, manufacturing overhead for 70,000. E, manufacturing overhead for 140,000. And then F is our applied overhead, so that's credit 378. So right now we have a credit balance to our manufacturing overhead account of 16,000.